Hello, this is Professor Richard Holozak coming to you with another video lesson. This lesson is on the definition and differences between level 1 and level 2 market data. As always, you can see more of my articles, tutorials, and blogs here on holozak.com in the category Financial IT. So what will we go over today? First, we'll have a very quick review of limit order books. If you've not reviewed this video that I put together on how the limit order book works, most of what I talk about in level 1 and level 2 data won't make any sense to you. So I suggest if you haven't done so, go ahead and head over to this site, check out the video on limit order books. But we'll talk really briefly about limit order books. We'll talk about the market data that exchanges give off as a result of the manipulations to the order book. We'll talk about what level 1 data is. Sometimes that's called the top of the book market data. We'll talk about level 2, sometimes called order book or depth of market data. And then we'll talk about consolidated data feeds. And then finally, we'll look at some typical costs for market data. So here's a quick review. As you may recall, an exchange will maintain an order book for each security that they trade. So if you think about the New York Stock Exchange trades about 4,000 different stocks, for each of those stocks, they will have an order book. Sometimes that's called a limit order book or a central limit order book. The limit order book is populated by, as you might guess, limit orders. Limit orders specify a price at which the trader is willing to trade, and then a size, some volume or number of shares or number of contracts. Buy orders come in what we call bids, and sell orders come in as asks, sometimes called offers. These orders add liquidity. They provide other traders in the market the chance to trade with them. And limit orders tend to be passive, that is, we wait for the other side to match our price. Limit orders are going to interact with market orders. And market orders simply arrive specifying a particular security and the number of shares that they want to trade, and a market order trades immediately at the best price available in the market. And so while limit orders add liquidity to the market, market orders will remove liquidity from that order book. Market orders tend to be more of an active position, so they're going to take a volume at a particular market price. So you've probably seen various order books if you've looked at different data systems like a Bloomberg or a FactSet or a Reuters. Can switch over here to my shared screen. Here's what's called a depth quote that's available in FactSet, and you see all of these funny blinking numbers here. You see these different levels that are in the book. These are the kinds of things that we're going to talk about today. Here's a very similar live shot looking at an order book or market depth data, I should say, through the TradeStation platform. So this is the type of thing that that we're talking about here. So I think it helps if we take a step back and we consider how data flows in a marketplace like this. And really, all of this starts with traders. Actually, nothing would happen at all in a market if it weren't for the traders. And these traders have some need to either buy or sell securities. Those needs to buy or sell securities manifest themselves as orders. And these orders are either going to be new orders, they'll be added. They might be a command to modify an existing order, or maybe to cancel an existing order. And as we talked about, there are things called market orders, limit orders, and stop orders. That's another video I can point you to in a little bit. So these are basically the instructions that traders are going to be sending to their brokers. Now, the brokers in turn are going to pass those orders on to an exchange. We talked about in a couple of other videos where the broker can internalize, or they can cross an order or route an order somewhere else. But let's assume that in this case they're going to route those orders to a particular exchange. And so basically what the broker has available to them are very similar instructions. That is, they're able to add a new order to the book, they're able to modify an existing order, they're able to cancel an existing order. And typically, there are two basic types of orders that they're going to have available: a market order and a limit order. Ultimately, these commands that are coming in, these add, modify, and cancel commands coming into the exchange, will be reflected in the order book. And here I've just shown a set of bid prices and a set of ask prices with some number of lots in parentheses. Each time one of these commands ends up at the exchange, that's going to result in some type of market data that can be generated. And the exchange is very, very interested in making this market data available. As we'll see towards the end here, they do charge certain fees to work with this market data. And who ends up consuming? I probably could have written another arrow here. The market data gets reflected back to the brokers, who then show this back to their traders. And so the traders are then observing what's going on in the marketplace, which of course leads them to add, modify, or cancel orders to their brokers. The brokers turn around and add, modify, cancel orders in the exchange, which results in, you guessed it, more market data, and this dance just continues all day long. So let's take a look at what data is available that can come out of a limit order book. And we can really think about a set of events that go on. An order add is an event where the exchange will show the time. It'll give a unique order ID, a symbol, maybe for a stock or an option contract or a futures contract, the side of the market, which means whether they're buying or selling, the size, could be again the number of shares or number of contracts, the particular price they're willing to trade at, and possibly some conditions, how long this order should stay in the book, for example. In order delete or cancel, all that's really needed there is just the time and the order ID. Because we're deleting or canceling an existing order, this order ID has all the information we need. It will be linked to an order that was previously added. So this amount of information is sufficient for the exchange to indicate that an order has been canceled. And then we have an order modify. Again, we'll have the time, we'll have the order ID, and then maybe we'll have a new size. Maybe they want to increase or decrease the size, number of contracts or number of shares, and possibly a new price. They may want to increase or decrease their price. And once again, maybe some additional conditions, how long that order might be good for. The state of the order book at any given time is determined by the cumulative effect of all of the messages that the exchange has received up to that time. So if we're talking about the state of the order book at 12 o'clock noon on a trading day, that order book will reflect all of the add, deletes, and modify messages that it's received throughout the entire day from 9:30 up until noon. Here's a sample of, this is actual order book data that came from the Direct Edge exchange. At the time I'm making this video, Direct Edge has now merged with BATS, but at the time they operated this independent exchange, and we can see here, again, the timestamp. We can see the order ID. B would be an instruction for a buy order, S would be a sell order, and D is an instruction to delete. The symbol happened to be the stock for Dell, and you can see the number of shares for buying and selling, the limit price at which they're willing to pay, in this case to buy, $14.45 in this case to sell, and then the exchange, K happens to be the official exchange letter for this Direct Edge exchange. And I'll just point out real quick to you here, this particular order, 116.31918, was added at 9:59 and 16 seconds, and then it looks like just a few seconds later here, maybe about 8 seconds, little more than 8 seconds later, that same exact order was deleted. So here's a buy order that lived in the order book for about 8 seconds, and then it was deleted. Okay. So again, if we add all of the messages together here, if we compute all of the effects on the order book for all of these messages, we'll get the state of the order book at a particular point in time. So the exchange has this order book, which is getting updated by these incoming add, delete, and modify instructions. And what can the exchange get out of that? Well, at the very basic, The exchange can give off a set of data that includes any time a trade happens. So we may see this order here, a bid for $33.10, and a market order gets submitted to sell 100 shares, and this execution or this trade will then get reported. 100 shares traded, say, at $33.10. And this could form a data feed that the exchange might want to send out. Level one market data refers to what is essentially the best bid, price, and size, and the best ask price and size, along with the trades and executions. And so let's explore that. If we look at this order book, right now we see for whatever security this happens to be on this exchange in their order book, $33.10 is the best bid, and that's for 200 shares, and $33.15 is the best ask for 100 shares. This top of the book, literally the 33.10 for 200 shares and the 33.15 for 100 shares, is the level one market data that most folks talk about. So you would not see these other orders in the book. You would not see these other price levels in the book. So again, when folks typically talk about level one market data, they're talking about the best bid price and size and the best ask price and size, along with, again, anytime there's a trade or an execution, that will also get reported. The level two market data will aggregate all of the orders at a particular price level. So let's take another example. This $33.10 bid has 200 shares. At one level, we might say that this could be one order, or it may actually be two orders to buy 100 shares each that share this $33.10 price level. So generally, level two market data is going to aggregate across price levels and give the full depth of the book. So for each price level, the total number of shares that are available to trade, both on the bid side and on the ask side for each one. And then again, along with trades and executions. Although there are some exchanges that do not give the trades and executions with their level two market data. They actually send that as a separate feed. And then finally, we would have very detailed order book market data. And this would be every order book message. So it may include trades and executions, but it's certainly going to include every add, delete, and modify message that the exchange takes on. And so this would be the most detailed data that we could get out of an exchange. So here we have 4 potential data sets that an exchange could send out. Here's some examples of level one market data. We talked about this being the top of the book quotes from each exchange and then the last trade from each exchange. So here's an example of Intel Corporation, and we're looking at the level one quote. We can see here the last trade information when I took this screenshot, $31.53, what time that particular trade happened. And then we can see the level one quote. We see the bid price of $31.52 for 47 lots. These are 100 shares each. And then we see the ask price, $31.53 for 30 lots, again, 100 shares each. We can see the time at which these quotes were posted, and we can see the exchange. The bid currently is held by NASDAQ at $31.52. The ask is currently held by BATS. This particular vendor, this is a screen from FactSet. They embellish the level one data with some additional context, so you can get a lot more detail about what's going on. But truly, the level one quote would be just this area right here in the top. So the best bid and ask, prices and sizes, and then anytime there's a trade. If we flip our screen here, we can see that running in real time. So here's that same quote. So we can see how this is going to update in real time as FactSet samples all of the different exchanges that are currently quoting Intel Corporation. Here are some examples of level one market data feeds in the US, just looking at equities. And I've just focused on equities for the sake of this video. The New York Stock Exchange has what they call a best quote and trade data product. And again, this is going to be just for the New York Stock Exchange, their equity level one quotes and trades. I'll make all of these clickable so you can go off and view the documents. New York Stock Exchange also operates the ARCA ECN, and ARCA has what they call the BBO, which is just the level 1 quotes that are available there. NASDAQ has what they call their basic service, which is the level 1 quotes and trades. And BATS Exchange, just to give another example here, has what they call the BATS Top, which are, again, just level 1 quotes and trades for the two exchanges that go under the BATS heading. Now we can talk about level 2, what we sometimes call depth or order book. And here again, we've got one example where the depth of the market is shown, but the orders are aggregated. And that's what this number is showing here over on the left-hand side. So there are currently, when I took this screenshot, 7 orders that were all sharing the same bid price of 31.52, and the total of those 7 orders comes to 36 lots. Okay, and that again should match what the level 1 bid is looking at here. On the ask side, there were also 7 orders that were sharing the ask price of 31.53, and that's totaling looks like 15,300 shares. Then again, for each level down, you can see there's only maybe 1 order each. Here's 3 orders on the bid side, and only 1 order each going down. Again, we'll take a quick flip here, and we can see the same screen in action. So this is what I would consider a level 2 quote, in that it's just showing each of the discrete price levels for bids and asks, and then a sum of all of the available liquidity from each of the exchanges at each of those price levels. The second level of detail here then would be every order at each price level. And again, here using this FactSet screen, we can see that every single exchange that happens to be sharing this bid price is represented here. And so there's 7 of them that are tied. And so this is going to show the liquidity available at each exchange here on the bid side and here on the ask side. The next price level down will then show, in this case, the market makers or brokers who are putting orders into the market at those particular price levels. We can see that simply by opening up our levels of prices here. We can open up a few more. We can see some of the additional price levels that are available and who's participating in them. To see that same style screen, this is the same type of thing in TradeStation. So again, we can see very, very similar data. TradeStation color codes each of the price levels, so it makes it a little easier to pick out. Okay, so here are some U.S. equity market level 2 feeds. Probably one of the more widely known ones is what's called the NASDAQ Total View. The data format's called ITCH. Here's the documentation for them. And this is going to be all of the orders and quotes, as well as executions, that is trades, that go on just in the NASDAQ market. For the New York Stock Exchange, they have their open book, which is again the limit order book just for New York Stock Exchange securities. ARCA book, which is the ECN that New York Stock Exchange operates, they have their own limit order book. And for BATS, they have what they call their Market Y and Market Z pitch format, which is the order book and executions for all of the equities that trade in the BATS market. Now I want to talk a little bit about consolidated feeds. And the main actor that comes into play here is what we call a Securities Information Processor, or a SIP. And so if we look at each exchange that's operating an order book for each of the securities that they trade, and again, maybe this is New York Stock Exchange for Intel, this is NASDAQ trading Intel, this is DirectEdge A trading Intel, this is DirectEdge X exchange trading Intel, and here's BATS Z exchange trading Intel. So it's all the same stock. We just see the order books from each exchange. What the Securities Information Processor does is they will aggregate all of the top of book feeds from each exchange. So just looking at the best bid and offer or best bid and ask from each exchange, take those and bring them all together in one place. By bringing all of the quotes together in one place for the top of the book, the securities information processor can identify what we call the national best bid and offer. So out of all of these bids, 3310, 3311, 3309, 3310, 3307, which one is the highest or best bid? And that turns out to be the 3311 bid coming from NASDAQ. What about the ask side? We have 3315, 3314, 3313, 13, and here's bats at 3312. 3312 is the lowest or best asking price. Okay, so that becomes the national best offer over here. So again, remember, offer and ask are really synonyms. So by flagging these quotes using the NBBO, that information then can be sent out, and brokers and traders will work with that data as a primary way of finding out what's going on in the market. So the consolidation is done by, again, tapping into each exchange, bringing the top of the book together, identifying where the NBBO is, and then sending all of those quotes along with this flag for which quote happens to be at the national best bid and offer off to the consumers. So here's some examples again in the US, looking at consolidated equity feeds. There's what's called the consolidated quotation system, and these are for all of the exchanges, New York Stock Exchange, Amex, BATS, Direct Edge, and all the regional exchanges, all of their level 1 quotes. You have the UTP plan quotation data feed, the UQDF. This is for NASDAQ listed equities, and again, the level 1 quotes there. So NASDAQ kind of goes its own way here, and then the CQS has everything else. For trades, we have the consolidated tape system, and again, that's going to be for New York Stock Exchange, Amex, ARCA, BATS, Direct Edge, regionals, all of those guys, and just level 1 trades. And then for the NASDAQ side of the world, that's called the UTDF. And again, that's just going to be NASDAQ listed equities and their level 1 trades. Another way to organize data into a kind of an order book, and I call this a pseudo order book, is if we look at all of the level 1 quotes from each exchange and we order them by price. So this isn't technically really an order book, but some market data vendors will actually show it this way. And essentially what they'll do is they'll line up the top of the book bid quotes from each exchange, the top of the book ask quotes for each exchange, and they'll maintain a price time priority just with those quotes. And so we saw here that each of these exchanges were tied on the best bid, for example. And so market data vendor, in this case, will organize them according to when that quote was achieved. So in some way, it simulates what an order book might be, but it's not really a true order book. But if you ever see something like this, no, this is kind of what's going on. They're just cherry picking the level 1 data from each of the exchanges and then just representing it in this way. Okay, so now I want to talk a little bit about what it costs to retrieve this data, because this is almost always the next question that we get. Obviously, the exchanges do charge for this. It's one of their main ways that they make revenue, in addition to matching up orders and charging a trading fee. And so one of the first biggest considerations that comes across is, who is the ultimate consumer of the market data? If it's a non-professional, like a retail trader, essentially someone who's trading for themselves, they're trading with their own money, that's going to be a non-professional. Anytime you have someone who is trading with other people's money, and that could be a financial advisor all the way up to a small hedge fund or beyond, those are going to be considered professionals, and they get charged quite a bit more. The second consideration is whether or not the data is delayed. Most exchanges will give away their delayed data on a 10 or 15 or 20-minute delay. That's almost always free. There might be a few exceptions to that, but pretty much all the major exchanges in the US, if you want to get their data on a delayed basis, it's almost always going to be free. The real time is obviously going to cost some money. It might be discounted based on how many orders you put in. I've seen some brokers will charge one price if you put 5 orders in a month, and they might waive the fees altogether if you put 50 orders in a month or something like that. So here's some examples. And again, this is going to be the cost per month per trader. And I just picked out a couple of examples for you here. So here's the NASDAQ Level 1 package. If you are a customer of Interactive Brokers and you're a non-professional, they're going to charge you $1.50 a month to get NASDAQ Level 1 data. If you happen to be a professional, they're going to charge you $23 a month. On TradeStation, if you're a non-professional, it's going to be $1 a month. And if you're a professional, they're going to charge you $28 a month. Now we jump up. If we get the NASDAQ Level 2 data, even for a non-professional, it's going to be $15 a month. For the pro, it goes up to $76. TradeStation is $11 and $110. So you can see the price difference is pretty dramatic once we start talking about Level 2 data. Here's the New York Stock Exchange ARCA order book data that we mentioned before. And here we can see, again, the non-pro is about $10 a month. The pro, it's $40 a month. TradeStation, very, very similar. We can also look directly at each exchange, and we can see what they might be charging. Okay, so that about wraps it up. And just in summary, we talked a little bit about some order book dynamics and how each exchange generates market data. We talked about how exchanges repackage this data in various forms, the difference between level 1 and level 2 data, and some typical costs for level 1, level 2 data. As always, you can find more videos like this at my YouTube channel, and obviously more blogs and tutorials available on holozak.com. Thanks for watching.